So this is going to be going over fair value gaps part two. This is a little bit different video format. I got two different things. I got PowerPoint slideshows, and then we're going to move into the actual charts and marking these out live. So recapping what fair value gaps are, they're imbalances that go in one direction within the market, rather that's bullish or bearish. So I have two good examples of these. We have this one up here, and then we have a drawn out version. So this one up here obviously is an actual fair value gap on the chart that I marked out. And I thought I might as well draw this out to kind of give another recap of what this is. So a three candlestick pattern where two top and bottom wicks are not touching at all. Example to the right, we got two of these. So we have a drawn out example. This one's really easy to see. We got the top wick. Oh, this is a bullish fair value gap. So we have the top of the bottom wick of the bottom candle and the bottom of the top wick here. And we see in red here is these wicks that do not go into each other at all, and that imbalance within it is the fair value gap in and of itself. And then we have a good example of it right here in the charts. And then obviously, if you're looking carefully, you can see there's even one over here. We got one over here, and then we have one here as well. So there's a few different ways price reacts to fair value gaps. These are the three main ways that I've seen and that I see off quite a bit. We have price respects to fair value gap, disrespects, and taps into. And obviously I have more examples of each of these, but these are the three that I've seen quite a bit, and these are the only three that I'm very concerned about. So here's an example of when price respects fair value gap, price continues to go in the direction of the fair value gap and doesn't tap into it at all. I think when price respects and taps into is kind of the same idea here. Respecting the fair value gap, I feel like doesn't give us much information really. It just price continues to move up, right? We even have another fair value gap right here. We have one right here. We have all these fair value gaps and prices just continue to look very bullish. This means price is likely to continue in that direction. That's a lot of what we're going to see in these fair value gaps is when price happens to go into them or whatever happens out of them outside the fair value gap, if it taps into, if it respects it or if it disrespects it, price will continue to move in that direction. Now that tends to be the case with higher time frames. If you look on the hourly, like all these examples are on the hourly time frame, they show that quite a bit. But if you go on the smaller time frames, like when we go in the actual charts, it does look significantly different. This is a great example of when price disrespects the fair value gap. So this is when price rips through the fair value gap, completely closing above slash below. So this is an example of bearish fair value gap getting disrespected. So obviously this means price will likely continue in the opposite direction of the fair value gap. And this will apply with the higher time frames and smaller time frames as well. I think when price taps into and respects fair value gaps on the smaller time frames, doesn't apply quite as well. But when price disrespects, I do see quite often that it continues. So obviously we have a very strong close above this fair value gap. Also, this is on the hourly time frame. So when this stuff happens on the higher time frames, it's like a little bit of a stronger confluence. Anything that happens on the higher time frames is a stronger confluence than on the smaller time frames. It doesn't matter what it is. A hourly order block will always be stronger than a 5-minute order block. A 4-hour fair value gap closure above is always going to be stronger than a 5-minute closure. So that's super important to understand. We're not going to worry about order blocks right now, but this is a great example of disrespecting a fair value gap. Another good example of this is when price taps into the fair value gap. This is kind of hard to see with this wick right here, but this is when price taps into the fair value gap literally and continues to move in the direction of the fair value gap. So this could be helpful for entries and showing when a fair value gap is valid and price will continue to move in that direction of the fair value gap. So we have a couple examples. This is a good example of it tapping into. So literally a candlestick will tap into and continue to move up. I think this is kind of the same thing as respecting a fair value gap. So you can kind of merge respect and tap into the same thing. But the important thing is to understand the difference between respect and disrespect for value gaps are two very different things. You have to understand that when price disrespects a fair value gap, it's a little bit of a stronger confluence, I feel like, than respecting a fair value gap, but that's just my opinion. Another term you're going to hear quite a bit is filling in fair value gaps. So there's no like definition of filling it in really, or mostly filled in usually when if we had an example here, I'll go in the charts obviously, but when we have this fair value gap here and price, if price moves all the way up into like and fills on like 85% of this fair value gap, I'm just going to say it's filled in. There's no point of, it doesn't have to be filled in all the way like this. Like this is an example of getting filled in. Like we don't have to have a complete candle closure above here for it to be filled in. A wick just has to go through it. Something has to go through it, right? We can have it tap into, continue to move down. Price kind of rips through it here and then continues to move down. So this is a good example of price filling in a fair value gap. You're going to hear that quite a bit when you're just starting trading. So this is kind of what it means. It literally is filling in a fair value gap. There's no other way kind of to explain it. Another thing that I went over in the last video, but I will continue to go over again, is these are price magnets. Everything we go over moving forward with fair value gaps, which are imbalances, order blocks, breaker blocks, uh, all these very important things you need to understand. The draws of liquidity, these are all price magnets. Price wants to fill these things in. We can see right here a perfect example of this. We have a huge bullish fair value gap right here. We see price move up. This was the area actually I had marked out for this fair value gap over here earlier, but this is a good example. We see price continue to move up. What happens? Well, we end up getting complete closure below this. So this is a good example of price, especially on the high time frames, will always want to close these. All of these will be filled in eventually. This isn't like, hey, when price moves up here, oh my God, it's going to fill in right away. That's not the case, but there's other confluence you need to understand. But this can be a great confluence, right? I see these a lot with my trading. I will mark out fair value gaps and say, hey, this is where price is going to want to fill in, especially on the higher time frames, like this case. On the hourly time frame, we see price really wanted to close this really hard. We have another fair value gap over here that got filled in pretty much right away. So there's a ton of confluences here that you can take trades off of, but I think these are great for price magnets. So as I said, we're going to be moving into the charts and actually marking these out live. Like I'm not just going to be looking up like examples on Google. I'm showing that I actually know what these are. So we have a great example right here of price tapping into a fair value gap. So I'll go ahead and get my little rectangle out. So we have this bearish fair value gap right here on the hourly. We see price kind of accumulate within it and continue to move down. This isn't like a good enough confluence to like take a trade off of. I would never take a trade off of some consolidation, not even in Asia session, right? This isn't like strong enough confluence, but it is an example of price tapping into. And then on the contrary, we have a good example of price disrespecting this fair value gap actually right here, right? We have a bearish fair value gap located right here. What we did, we got price completely closed above. We had a pretty nice rally up, but this was also right at the end of New York session. So not the most volume on the planet, but I'll just turn this off so that way it doesn't start confusing people here. We have a good example. That's filling it. So this is a good example of filling in a fair value gap. So right here, we fill this fair value gap in completely. So you could say this is respecting or disrespecting. It's a little bit of both. Um, we didn't get a complete candle closure above, so it really is respecting or tapping into. I would just say this fair value gap's completely filled in, so it's kind of like invalidated, right? Something already happened within it. So like I would never be concerned about a fair value gap that looks like this because we've already been living in it for a few hours, right? So there's no point of marking it out. I mean, you could mark it out if you want, if you're just learning, but I almost view those as like invalid areas of invalid fair value gaps. So we have another good example right here where price closed completely above this fair value gap. Obviously, this is a lot smaller of a fair value gap, so some people won't even see this, but this is a good example of a bearish fair value gap. So we see price completely close above. We had price filling in and continue to move up. Again, this is not a good enough confluence to take a trade off of, in my opinion, but it is an example of it. So we have a few good examples here of price wanting to fill in these fair value gaps. So we have back to back right here, but I'm just going to be concerned about this bottom one right here. But we fill this fair value gap in right here pretty hard, generate an area of liquidity down here, but we will worry about that in a later video. And we pretty much fill it in right away, right? I mean, we're not going to get one candle closure above it typically, especially with this severe of a sell-off, but we pretty much fill it in right away, right? So that's what I mean by these are price magnets. So if you're within this bearish fair value gap down here, you probably want to target the top of it, not as necessarily a confluence, right? You're not like, oh my God, we're within a bearish fair value gap, we're going to want to target the top of this. That's not the case. But if you find more confluences within here, you can say, oh, okay, I want to target the top of this, right? Or the bottom of this. So fair value gaps are super nice for take profit areas. They're major draws of liquidity, right? They're voids in one direction. So if we have all sell orders right here, and there's nothing stopping buy orders, right? There's no some buy orders here, some here. These are all sell orders, and we have buy orders coming in. We are going to fill this in significantly quicker, right? Like this, versus we have a bunch of consolidation here, right? This doesn't get filled in quite as much. But when we have a ton of consolidate, when we have a ton of imbalance, like here, these orders they're going to get filled in pretty quick because there's nothing stopping it, right? We have all these orders, like think we have all these orders We have all of these going in absolutely one direction, right? We have everything going down here with no consolidating, nothing. We have price just ripping down. There's nothing stopping it from coming back up. There's nothing stopping. So that's what the importance of fair value gaps is and kind of understanding what they are. So that's going to be it for fair value gaps for two. We're probably going to pivot into order blocks. I made this fair value gaps video way too early. So this is kind of re-ramping. I'm probably going to make more of my videos like this. So that's pretty much it.